Well, last week, the fixed income market closed the last trading day sideways amid monetary policy uncertainty. The market also witnessed the opening of MTN Nigeria's 100 billion naira commercial paper. Tajuddin Ibrahim, Senior Vice President and Head of Research at Chapel Hill, Durham, joins us now for this conversation. Thank you very much, Mr. Ibrahim, for joining us on the program. Good morning. Good to see you.
Good morning. Thank you, too, for having me.
Good morning.
All right, let's look at the fixed income market for last week. How would you describe the sentiments observed both in the secondary and primary markets?
Well, thank you. I think the broad sort of development in the market last week is that the market broadly remained bearish. If we take a look at the primary market, talking about the T-bills auction for last week, we saw investors making higher demand for the T-bills offered by the CBN. The CBN was out to offer 89 billion naira, but demand was substantially high, at about 2.2 times the level that the CBN offered. So we saw demand coming in at 197 billion. So on the back of that, the CBN had to sell more than they actually offered to sell to the market. So they sold about 109 billion in T-bills. And one key takeaway from that auction for last week is we saw the one-year Treasury bills rate going materially higher to 6.5% from 5.5% it closed at the last auction. And what we also noticed that the 182-day T-bills as well as the 91-day T-bills were unchanged in terms of the stop rate on those two instruments. And so that takes me to another key takeaway from that auction of last week. And the key takeaway also is that the CBN's action is consistent with the debt management strategy office, strategy around debt. They prefer to be on the longer dated debt versus short dated debt, and they will give the required incentives for investors to stay at the longer end of the yield curve. So those are the key developments, that shaped the fixed income market last week, and we see more of that unfolding in the coming weeks.
All right, Mr. Ibrahim, with the uncertainty in the monetary policy and high inflation, what is your expectation for yields in the short term?
Thank you very much. In the short term, given the uncertainty on the monetary policy front, we expect yields to trade sideways in the short term. But when you now capture inflation into the picture, what you would probably see in the market is where investors are pricing higher inflation, in the yields in both the T-bills market and also probably the bond market. What we have seen so far is inflation touching 16.74%, for the month of January, and the month of February inflation will be reported most likely tomorrow based on the MBS calendar, and chances are that we will see higher inflation. So going forward, we expect investors to price inflation into the short end of the curve. So we'll probably see higher T-bills rate. And for the one-year tenor, we expect to see up to high single digits before the end of March. So given those two factors, we believe investors will be looking for higher yields in the coming weeks.
So what key product is in the market that investors can buy to improve the performance of their portfolios?
Thank you very much. The performance of portfolios for investors could improve if they buy into a product that is commercial paper being offered by MTN as we speak. MTN is in the market to offer 100 billion naira commercial paper for investors that want higher yields for their portfolios. The commercial paper opened last week. It is the series 3 and 4. It opened last week, Thursday, and it closes on Wednesday of this week. One key takeaway also from the commercial paper issuance is that investors will get up to 135 basis points higher in interest rate compared to what they would get when investing in government instruments. So we see this as a compelling instrument. MTN, we know, is the #1 telco company in the country, with about 76.5 million subscribers as we speak. And also, that is the only company that generates well over 1 trillion naira in revenue as a listed company. It is also the strongest in terms of EBITDA margin. The EBITDA margin for 2020 closed at 50.9%. There is no telco in the industry that matches that kind of a ratio in terms of profitability. So we strongly believe investors should take a look. And for you to subscribe, the minimum is 1 million naira to subscribe into MTN's commercial papers. But if you do not have, we can arrange something for you at Chapel Hill, Denham.
All right, we've observed a persistent increase in fixed income yields. What's your outlook for the fixed income market for the rest of this month?
Okay, sounds good. The outlook is that we'll probably see the long end of the yield curve move closer to 12%. And we believe that number is good enough if we consider the fact that Nigeria's long-term inflation on an average is 12%. So when investors in the current environment are able to get 12% on the long end of the yield curve, we strongly believe that that looks or sounds like a decent number for them to gain in terms of the yields on their portfolios when we talk about bonds. But when we talk about treasury bills, our expectation is that the investors should be more focused on the long end of the yield curve when we talk about T-bills. And those T-bills, we believe the one-year T-bills will close the month of March in high single digits. We have seen it move substantially from about 3.5, 4.5%, and also, from 5.5 to about 6.5% as we speak. So we believe the long end of the curve in terms of the T-bills is where the money should be going to. In terms of the short end, we think investors should play cautiously.
Right, you did mention the MTN commercial papers, and we've observed that over 1 trillion naira capital was raised by corporates through commercial paper and bonds. So with the rise in yields in the fixed income market, how will this impact on corporate capital raising this year?
Sounds good. Corporate capital raising this year, I think, will still be, there will still be an opportunity for corporate capital raising, despite the fact that we are seeing yields moving higher in the market. And the reason is that no matter what the yields are in the market, corporates will still find it more compelling to raise debt from the capital market than approaching the banks to either get overdraft or for them to borrow for short term. So the capital market still presents a decent opportunity for the corporates to raise debt capital in 2021. No doubt, 2020 was materially a year that that presented a very good opportunity for a lot of corporates to come to the market, considering that we had yields in the market being very close to zero. Nonetheless, we still have some opportunities for investors in the market. If you bear in mind that the T-bills yields are in the low single digits. So when you find a corporate that will give you up to 1.3 or 1.35% above what the government will give you, you will find out that as an investor, that is where to be. And so that is why there is still opportunity for corporate to raise debt in the current environment.
So we are aware there is a negative correlation between the fixed income market and the equities market. How much of downtrend should investors still expect as fixed income rates continue to rise?
Well, that's a very valid and good question. I think what investors, generally speaking, should expect is that this trend will last at least over the next couple of months. We have begun to see a repricing of yields in the market, and that is causing equities to go downwards in terms of the performance of the stock market. But what we believe is that there will still be some decent names in the equities market that investors could consider investing in. So in the short term, investors should expect this trend to continue, where we will probably be seeing more preference for the fixed income and money market instrument as yields are going up. But investors should also bear in mind that they cannot replicate the type of return that they had last year when yields were materially down up to like level 0. They can't replicate that return in 2021. For you to play well in the market and generate decent returns, you need a very good mix of fixed income instruments as well as very strong equities for you to have decent returns on your portfolio as a portfolio manager in 2021. That's our belief.
All right, Mr. Ibrahim, what's your advice for retail investors in respect of the fixed income market for 2021?
Very good question. I think retail investors should look to, for instance, we are talking about MTN's commercial paper, and that commercial paper has a floor of 1 million naira for you to come into investing in those papers. Assuming that you don't have up to 1 million naira as a retail investor, what you should do is to speak to us at Tapu Hidden Hand. Then we will structure something for you that will ensure that you are also able to tap into the kind of good returns that you will see on MTN's commercial papers compared to what you would see on the government instrument. Apart from MTN's commercial paper, there will be other commercial papers that will be issued this year. In 2021, we believe retail investors should also pay attention to them and take part, for good returns. Bear in mind, what you get investing in commercial papers and probably also in treasury bills of the CBN are a lot more compared to when you put your money in savings accounts. This is why we believe investors in the retail space should look into some of these very good instruments for strong returns in 2021.
All right, thank you very much, Mr. Ibrahim. Tajuddin Ibrahim, thank you for sharing your time with us this morning. We do appreciate it.